Hello, today I'm going to teach you a very powerful trading strategy where you can actually buy the stock here and sell it higher. So it's a trading strategy which is make use of the 200-day moving average. I'll teach you from the beginners to an advanced level. So if you want to learn this strategy, please stick with me till the end, where soon you'll be able to learn how to buy here and also sell it higher. I call it the 200-day MA support trading strategy. Now, what will you learn in this lesson? You're going to learn a simple trading strategy. Yes, it's very simple because it's based on a 200-day moving average. This simple strategy will help you to make money in the stock market. If you are a student of the market, you will know that the 200-day moving average is a very important moving average for the stock market, the index and stocks. I'll give you a reliable, time-tested and easy to spot trading strategy. Just now you've seen the yellow line, right? If a stock drops to the yellow line, which is a 200-day moving average, right, you can actually trade it. It's easy to spot. It's reliable, and through years and even decades, the 200-day moving average has been a solid support for many stocks. I'll teach you how to enter the stock, how to put a stop loss, how to take profits. Basically, I'm teaching you how to manage the trade. You'll also be learning a trading strategy with great reward to risk ratio. When it comes to trading, you don't only want a high winning percentage. You can have a trading strategy that is 90% win rate all the time, but the 10% when you lose money, you lose 4 to 5 times more than the reward, and that's bad. Even if you have a trading strategy that is 50% win rate, but when you have a reward to risk ratio that is better than 3, 4, 5 times more, you're actually gonna be making money in the long run. So with this trading strategy that I'm going to teach you, you're gonna actually get 2 to 3 times more reward than your risk. And of course, I'm going to teach you some very advanced things. If you're a beginner and you don't understand it, that's okay. You can always rewind and listen back, or maybe do a bit study on your own. I'm going to teach you how to use indicators like MACD, the moving average convergence divergence, stochastics, the moving averages to support your case. Why is that setup going to be successful? And you're going to improve your trading accuracy a lot. So I'll also be teaching you how to use a multiple time frame analysis, so that you're not only one-dimensional. You see, if you only look at the daily chart, you're not going to be able to have a better entry, and you won't be able to see the long-term picture, which is why you need multiple time frame analysis. You need to look at the daily chart, the weekly chart, the 60-minute chart, and if possible, look at the 5-minute chart as well. Okay, what is the 200 MA actually? MA stands for moving average. We are talking about the 200-day moving average. Let's start with the most basic understanding of what a moving average is. A moving average is an average of price over a period of time. Simple as that. Let's say we have a 5-day moving average. So let's say day 1, the stock is at $5, day 2 at $7, day 3 at $6, day 4 at $8, day 5 at $9. You take all of this together and you divide by 5 days and you get 7. So the 5-day MA for that day is 7. And for the 200-day moving average, it's the average price of the stock over 200 trading days. That's how I understand it, and every day the computer just calculates it and updates it. So that's why you have a moving average, and the moving average will either slope down, trade flat, or slope down depending on the price over a period of time. And this 200-day moving average is actually followed by many investors. many smart investors, many traders will look at the 200-day moving average, and one of the questions that they will ask is the stock or the stock market above or below the 200-day moving average? Because if it's above the 200-day moving average, the stock market is healthy, the stock is healthy. And sometimes they will ask the question here, is the moving average rising or declining or flat? So when you have the 200-day moving average rising, it means that the stock is actually in a long-term uptrend. And some traders or investors never buy stocks that are below the 200-day moving average. They don't even want to buy stock if the 200 MA is declining. They don't even want to buy the stock if the 200 MA is flat. All they do is look for stocks that are above the rising, the keyword here, rising 200-day moving average. Later, when I show you some examples, you'll be able to understand why we're going to look for stocks that are above the 200-day MA, especially if it's above a rising 200 MA. Now, the 200 MA, as I showed you in the charts before, it can be a support. It's a the price support is actually a psychological support, because so many people look at it, and sometimes it can be a self-fulfilling prophecy. Let's look at this stock, Apple daily chart, and this stock has been declining, rising, and then decline again. See, this yellow line here is a 200-day moving average. SMA, I use the simple moving average. You can use the EMA or so many other kinds of moving average, but the simple moving average is the best, because why? We want to keep things simple, and that's I think what a lot of people look at as well. So we have a rising 200 MA in Apple daily chart. What does it tell you? First of all, a picture can be worth 1,000 words. A rising 200 MA tells us that this stock is healthy in the long term, in the long run is healthy, right? That is why when the stock declines, it rises back up. And the 200 MA can be a support. So look at it, it drops, it finds support at the 200 MA, bounce up, drop again, finds support at the 200 MA, bounce up, decline, finds support at the 200 MA, and the third time, right, 3 times, boom, it rises all the way up. Right, from 126 to 147 bucks. So imagine if I have taught you this trading strategy, and you enter here and you exit here. How much profit are you going to make? And the good thing is you can place a stop loss here. So your entry is here, your stop loss is here, and you exit here. How many times can you imagine the reward to raise it? At least 3 times, isn't it? For every buck you stand to lose, you're going to make 3 times out of it. And this is the kind of reward, this kind of traits that we want to look for in the stock market. And yes, you can actually find trading opportunity setups that are 3 to 4 times the reward than what you risk. And that's what you're going to learn today. Now let's have a little discussion and talk about the confluence of technical concepts. Now, what are technical concepts? Technical concepts are like support, resistance. Okay, if the stochastics is oversold, yeah, the probability of the stock is going to bounce up. Okay, the stock is at an uptrend line. So these are technical concepts. So technical concepts are area where the stock is most likely to reverse, or continue to move higher, or bounce off support and stuff like that. When you look at a setup, you want to have many technical concepts coming in. So the more technical concepts that appear in a chart in your setup, the more powerful the 200-day moving average bullish reversal will be. You can treat it as conditions. Some people will look at, okay, I must have the 200 MA, and the stochastic must be really oversold, and I also want to see there is a bottoming tail Japanese candlestick pattern as the stock drops to the 200 MA, and I'm going to enter if there are these 3 technical concepts that that the stock has. So these are like conditions. If we don't have the 3 conditions not met, then I won't enter it. So it also acts as a filter. But most importantly is when you have many technical concepts, your chance of that trade turning out to be very rewarding, very powerful is good, because the more technical concepts that happen at that area, the better you are with the trade. So I'm going to teach you quite a number of technical concepts. Okay, something like break a downtrend line, right? Breaking a downtrend line is a very powerful technical concept. I also teach you to look at 60-minute charts, look at multiple time frame analysis. I also teach you how to use the 20-day moving average or 20-period moving average if you are looking at a 60-minute chart. I also teach you some chart patterns, the stochastics, the MACD, the moving average conversion divergence. And I'm going to also teach you a concept called bullish divergence. Now, this is some advanced stuff. That's why it's a beginner trading strategy. It's easy to spot the 200 MA, but it's advanced stuff because to improve your trading accuracy and success rate, you need to employ some of these technical concepts which is why if you don't understand, if you're a beginner, just listen through it once, just look at this presentation once, and then go back and learn some of these chart patterns, MACD, bullish divergence, or whatever that you don't understand. Learn it again, and then come back and look at this training again. Now let's look at this first chart. First of all, what can you tell me about this chart? What can you tell me about this stock? Okay, this is Apple. It's written here, is a daily chart. And the 200-day moving average, this is the yellow line, the 200 MA, is rising. First of all, the thing that comes into my mind is this stock is in a long-term uptrend. So every dip is supposed to be buyable, but we don't know where we should buy it. We know the dips are buyable, and we want to find the most perfect buyable dip. So we know now that stocks stop dropping when they hit the 200 MA, especially if it's a rising 200 MA. It's going to be a very powerful trade setup. So stock drops, rise, drop, rise, and for the third time, eventually it shot back up. So we have the stock at the rising 200-day moving average. It's already very, very powerful. But what can you observe? Okay, if you have learned a bit about bullish reversal chart patterns, I have an entire presentation about bullish reversal chart patterns for beginners. So I'm going to put a link in the description below so that you can look at it later if you have time. But what happened here is the stock moved down, up, down, down, up. And this is actually a triple bottom chart pattern. A triple bottom chart pattern is a very powerful bullish reversal chart pattern, and it happened at the rising 200 MA. So I have one technical concept, stock is at 200 MA. What's the second technical concept? Stock has a triple bottom chart pattern. Now the third thing I see here is stock breaks above a downtrend line. So here is a downtrend line where you connect the highs here, connect as many highs as possible. When the stock breaks above a downtrend line, it signals a change of trend. So there was sell off here, then a change of trend to a bullish uptrend. Okay, so I have three technical concepts already. And there's another technical concept that you need to learn is the 220 MA. When a stock goes above the 20 MA, short term is bullish. When it goes below the 20 MA, short term bearish. The 20 MA is the red line here. As you can see, when the stock went back above the 20 MA, what happened? Stock rise. Okay, all the way it has been above the 20 MA most of the time until here. That's why it keeps rising. Short term, we deem it bullish. So when the stock went back above the 20 MA, we have already four convergence of technical concepts here. And what's the other one? Always learn to look left in the chart. Okay, look left of the chart. Here we have a congestion area. This congestion area was the previous low. Alright, and previous low area, especially when there's so much trading here, is a very strong support area. So that's why the stock dropped to here. It cannot go any lower because there's so much support here. So when the stock is at the 200 MA and at the support area, we now add another technical convergence, 5 technical concepts, which is why it is a very profitable trading setup here. And look what happened. The stock just moved back up. Now, the 6th technical concept, you look at what? Multiple time frame analysis. I've talked about it earlier. This chart is the hourly chart of Apple. Okay, the previous chart here, this is the daily chart of Apple. How you know is the daily chart? Here it says 1 day. The 60-minute chart here, 1H, means 1 hour. We have a triple bottom in the daily chart. This is the hourly chart. 1 bottom, 2 bottom, and 3 bottom. So this is like kind of zoom in into the what happened in the stock in a smaller time frame. And when you look at the smaller time frame, you can actually see a lot of things. First of all, you can draw a better trend line. Trend line you draw by connecting as many highs as possible. So when the stock breaks above the downtrend line, it signals a change of trend. And when the stock also goes back above the 20 MA, we become short-term bullish. So we have the stock also breaking back above the 20 MA. When the stock breaks back above the 20 MA, we are short-term bullish. Now remember, this is a 60-minute 20 MA, but it still works. Whenever the stock is below the 60-minute 20 MA, like most of the time here, is bearish. When it goes back up above the 60-minute 20 MA, we are short-term bullish in the 60-minute time frame. So what can you see here? We have a low here, but the stock makes a higher low here, and there's even a higher low here. Now if a stock goes down and it refuses to go down even lower but makes a higher low here and a higher low here, it should also tell you that, hey, actually this stock is getting stronger. It's not getting weaker, because stock refuses to go way below this low here. There's a sell-off, no doubt, but the sell-off end up at a higher low. There's a sell-off again here, but it ended up with a higher low. You can actually draw a line here and see that it's slanting up. So there is what I call a hidden bullishness. Okay, the bulls are getting stronger, and when the bulls are getting stronger, right, you want to position yourself to join the bulls before the stock shoots up. So how do you enter this stock actually? How do you enter? Well, I can give you an entry condition. One of them is you have to wait for the stock to break back above the downtrend line, and the stock must be above the 20 MA. You enter the moment it breaks above the downtrend line in the 60-minute chart. So your entry will be here. You buy here, and where do you put a stop loss? You put a stop loss at the most recent swing low, right? If you're aggressive, right, you put your stop loss at the recent swing low. This is a recent swing low here, because if the stock is bullish and breaks above the downtrend line, if it's bullish, it shouldn't drop below here. Yes, after it breaks above this downtrend line, it dropped a bit, but eventually, because of a change of trend, continue to rise and rise. Okay, higher lows, or you can actually put your stop loss here or here as well, depending on how aggressive or conservative you are. Some people, they don't like whipsaws. You know what can happen is the stock may break above this downtrend line here, and it just go back down here, right, and hit the stop loss here, and then shoot back up. Things can happen. So some do not like whipsaws. They can put the stop loss below the entire chart pattern. Now, I've talked about downtrend line. Some of you may be a bit blur. Okay, he's talking about downtrend line. I don't understand what it is. I'm new to this. It's okay. Let me just give you a little bit of guidance on downtrend line and how to draw it, and we just want to demystify this downtrend line. Now, a downtrend line is a line drawn to connect the highs as the stock decline. You want to connect as many highs as possible. And one of the things that you can learn from downtrend line is when a stock breaks a downtrend line, it signals a change of trend. Yeah, before that it was in a downtrend. So when you draw a downtrend line and the stock breaks above the downtrend line, it means from downtrend you want to change to an uptrend. So you get it? Downtrend, break the downtrend line, change into an uptrend. So simple, easy peasy. Okay, so how do you draw a downtrend line? How do you actually draw a downtrend line? Okay, this is the daily chart of SPY. Now, number one point, drawing trend line is actually a skill. Yeah, it's actually a skill. Many things in trading and analysis and looking at the charts are actually a skill, and you need time to learn the skill, isn't it? Like riding a motorbike, riding a car, driving a car, right? Or learning woodworking is a skill, okay? And one of the things is trend line is something that you need to spend time drawing. And actually there are many ways to draw a trend line, but I want to teach you a simple way to draw a trend line. You look as the stock is declining, okay? There are times when it goes back up, there are times when it goes back up, okay? Just try to connect as many highs as possible. This is a high here, okay? This is a swing high, there's a high here. Just try to connect as many highs as possible, okay? And some people may debate, should I connect the highs at this wick here or the body or whatever? It's okay, because drawing trend line are subjective. There is no hard and fast rule or concrete rule. Some people like to draw a trend line above the wicks, slightly above the wick. Some people might just draw it into a body, but it's okay as long as you connect as many highs as possible. That is the trick, okay? It's just a rough guide for you. There's nothing written hard in stone, okay? I can just move this downtrend line and draw it higher here, you know. Instead of connecting like this, I can just connect it higher like this, okay? So the trick is to try to connect as many highs as possible, and this is something you don't need to be perfect. Let's take another example here. There's a high here, drop, swing high here, drop, the swing high here, drop, swing high here, this is swing high, drop, swing high here, drop. So what I did was I connect the highs here, the highs here, right? And this is a downtrend line. I could have connected here, but I choose here. And that's okay, because I connect as many highs as possible, okay? You don't need to be perfect as long as you connect as many highs as possible. And what this tells me is this stock has been, the SPY has been declining, and the moment it breaks above this downtrend line, right, the trend has changed from down to up. Same here. Sell off, downtrend, change to uptrend. That's why it went up. So simple as that. Okay, so don't worry too much. Just connect as many highs as possible. You don't need to be perfect. It's just a rough guide for you. Now let's look at the 60-minute chart. Okay, just now is a daily chart. Now I'm going to teach you how to draw a trend line in the 60-minute chart. So we have this SPY as well, trading sideways and move high. It sell off a bit and try to move up, sell off and move up a bit, sell off. Okay, so how do you draw a trend line? Let's say connect as many highs as possible. This is a high here, a high here, a high here, and you just connect, right, to get this downtrend line. And what happens when the SPY breaks above this downtrend line? From a downtrend, break above the downtrend line, now it's in an uptrend. See, it's a simple tool, but it's really powerful, right? I'm not kidding you, it's really powerful. When the SPY breaks above the downtrend line, right, the stock can move from bearish to bullish. So you want to learn and practice drawing more trend lines every day. Now, next thing I'm going to talk about is the 20 period moving average. Now, this moving average can actually be a trend following tool. Okay, remember I talked about the 200 MA. When the stock is above the 200 MA, is a long-term uptrend. If it's rising, we have long-term bullishness. So we're actually using the moving average as a trend following tool, because sometimes when you look at chart too much, right, you become so dizzy. You want something that's simple for you to filter out. Okay, is the stock in an uptrend, downtrend? Okay, is it in a short-term uptrend, short-term downtrend? So 20 period moving average is 10 times lesser than the 200-day moving average. 200-day moving average is a long-term trend following tool. 20 MA is 10 times less, so it's a short-term trend following tool. So if a stock is above the 20 MA, the short-term trend is bullish. If the stock is below the 20 MA, guess what? The short-term trend is bearish. So you buy a stock only when it's above the 20-day moving average. Okay? And if you want to choose your entry in a 60-minute chart, right? What we're going to do in this trading strategy is you find the setup in the daily chart, which is when stocks drop to the 200-day moving average. You get ready to buy. But your entry, I will teach you to enter in a 60-minute chart. Okay? You will buy a stock only if it trades back above the 60-minute 20 MA. So, to recap, you find the trading candidate in the daily chart when it drops to the 200-day moving average, but your entry will be in the 60-minute chart when it trades back above the 20 MA. Okay? Very important. We just learned two things: how to draw trend lines and using the 20 MA as a trend following tool. So now let's take a look at how the 20 MA works. Okay, this is a daily chart of Apple. Okay, if the 200 MA is a long-term trend following tool, the 20 MA is a short-term trend following tool. See, when the stock is below the 20 MA, this red line is the 20 MA. Look how bearish it is. Declining 20 MA, all the way it declined. Then it zigzagged along the 20 MA, then it went down again. See how bearish it was. And the moment the stock went back above the 20 MA, right? See how bullish it is. And most of the time as it goes up here, the stock was actually above the rising 20 MA. So it's a simple trend following tool. Be bullish when it's above the rising 20 MA. Be bearish when it's below the 20 MA. Okay, this is a easy short-term trend following tool. Okay, and once you learn this thing, right, you're gonna be able to filter out when you're gonna trade. Are you gonna buy the stock here? Probably not. Are you gonna buy the stock when it's above the 20 MA? Yes. Okay, so this is a simple filter tool. Why use the 20 MA? You can use the 10 MA, you can use the 30 MA for short-term trend following, but my preference is 20 MA. I don't want something too sensitive, neither do I want something too long like the 30 or 40 or 50 MA for short-term trend following. So I'm comfortable with the 20 MA. You can change it a bit, you can use the 18 MA, but what you need to do is use your experience. The more you study stocks with the 20 MA, with the 18 MA, or whatever MAs, right, you will learn more things. So as I said just now, we look for trading candidates in the daily chart, but the entry will be in the 60-minute chart. How do we enter? This is a chart of the previous 60-minute chart of Apple that I showed you previously. Our entry is when the stock breaks the 60-minute downtrend line and when it is above the 60-minute 20 MA. So look at this stock, it has made a triple bottom. Okay, we draw a trend line. Where is our entry? Stock must be above the 20 MA. We buy it when it trades above the downtrend line. Okay, the entry is here. And the stop loss is either here or here or here. Depends on whether you're conservative or aggressive trader. So simple. Okay, your entry is break 60-minute downtrend line and it must be above the 20 MA. So don't worry, we're going to look at many examples. Now let's take a moment to pause and look at what the lessons that we have learned so far. Okay, it's like a midway recap like this. It's important because I want you to understand things. Okay, lesson here: we use the 200 MA in the daily chart to find what? Trading candidates. Okay, then we check and see if there are chart patterns in the daily chart. Is there a triple bottom, a double bottom as it hits the 200 MA, or any bullish reversal chart pattern? Then we look at did the stock break a daily downtrend line? Wow, if the stock bottoms and breaks a daily downtrend line, wow, wow, this is going to be really powerful. And then you look at indicators, okay, such as stochastics or MACD, right? Later we're going to look at many examples. Is a stochastic oversold when the stock hits the 200 MA? If yes, wow, this is another technical convergence. Then we zoom into the 60-minute chart. Why? Because we know we want to have a better entry. We want to see what's happening in a smaller time frame, and we want to see if the stock is able to break above a 60-minute downtrend line. That is our entry point. And also, as a filter, we want the stock to be above the 20 MA. Because why? If the stock is above the 20 MA, short term is bullish. Okay, we don't want to buy the stock when it's still bearish, right? Who wants to buy a stock when the probability of going down is very high? You want to buy the stock when the probability of going up, right, is higher than going down, right? We trade in probabilities, not certainty, probabilities. Okay, the higher probability is bullish, that's when you enter, and that's why you use the 20 MA in the 60-minute chart. Okay, now let's look at Apple again. Now, if you realize that I think I have 3 examples of Apple itself. One of the amazing things about these large cap stocks is this, especially S&P 500 stocks, is they tend to find support at the 200 MA. Why? Because a lot of large institutional investors are going to look at the 200 MA, which is why it's a very good idea to look at stocks in the S&P 500 and Nasdaq 100 and see whether they are dropping to their 200 MA, especially a rising 200-day moving average. So we have Apple here in the daily chart. Yeah, this is Apple daily chart, and it's a Nasdaq stock. Okay, it's also an S&P stock. Apple is in many indexes. So what happened here was the stock went up, ting, ting, down, up, tong, ting, tong, ting. Okay, then what we are interested is not what happens here. Yes, there's a cup with handle pattern. Some traders will be trading the breakout. Some traders will be shorting. Some traders will be buying here. But we are not interested in any of that. What are we going to be interested in? We are going to be interested in the stock when it drops to, yes, the rising 200-day moving average, which is this golden line. Okay, anything that happened here, you don't care about it. Okay, you just focus on the 200 MA. And yes, we see a trading setup here. And the moment it touches, it drops to the 200 MA or near the 200 MA. Yes, it dropped below the 200 MA, but it quickly finds support here. You know, gap down. The next day, a large bullish green bar appeared. Okay, it's as if it's telling us, wow, something's big is going to happen. And indeed, something big happened. The stock went up straight for so many days. Okay, your entry point will be somewhere here. Okay, that is when it's in your radar, is you put it in your watch list and you see whether you can enter it the next day. And what are you going to do? You're going to start to think whether this is a tradable trade as well. Go through the checklist and the things that I've taught you. Okay, is there a chart pattern that appear in the daily chart? Then you look at this and, oh yeah, it looks like a double bottom. Yes, it looks like a double. It's a double bottom. Yes, here's a double bottom. And then you look to the left and see, okay, there is a support area, this cup and handle pattern, and there's a sideways trading here, which acted as support. Okay, so there are 2 technical concepts that support the 200-day MA already. Okay, then you have a bullish green bar in candlestick. It translates to, yes, there's buying interest here. 3 technical concepts. Okay, so you're gonna be very interested in the stock when there are 3 technical concepts that line up. Okay, and of course we're gonna look at the 60-minute chart later to see how to enter, exit. Okay, so the stock trades up after that because it's such a perfect setup. Okay, but you want to take your profits faster because there's a resistance area here, or like I taught you just now, to look at the 20 MA. When the stock drops below 20 MA, short-term bearish, isn't it? So you might want to be selling the stock here. But anyway, if you know a bit about resistance, you might just want to sell over here. But no worries, let's look at the another chart. Okay, Before we go into the 60-minute chart, this is same chart of Apple, double bottom, but now we input this MACD, MACD 12.26.9. Okay, you might want to use RSI or whatever you want, but just learn as much as you can, maybe master that. I'm just teaching you to use the MACD and also the stochastic 14.33. So I use 2, and also the Bollinger Bands. This is the Bollinger Bands, the 20 period and 2. Okay, this is the Bollinger Bands. Okay, we have this stock making a double bottom. Okay, we have a higher low here and a lower low here. And what the first thing we're going to look at is whether there is a bullish divergence. So stochastic told us that while the stock was making a lower low, the indicator was making a higher low. So what this tells us is that there's a bullish divergence and there is hidden strength in the stock. And then we have this MACD buy signal that happened here, which about here. Okay, this is a buy signal, which is why a lot of people jump in. And we have railroad tracks in the MACD, which is why it's rising up so fast. And stocks tend to reverse back up when it hits the lower band of the Bollinger Band. So we have 1 signal here, 2, and 3. And coupled with the double bottom and also the 200 MA, we have many technical concepts that are converging, which is why this trade was so nice. Okay, now we're going to go into the 60-minute chart. Okay. This is the 60-minute chart, 1 hour here, and this is your double bottom in the daily chart. If you can see it, each bar represents 1 hour. Okay, this is a double bottom. Now, how do we enter this stock? First of all, we're going to draw a downtrend line. We're going to draw a downtrend line. Okay, connect highs, another high, and here we get downtrend line. And the second question you must ask is the stock trading back above the 60-minute 20 MA? Yes, it has gone back up the 60-minute 20 MA when it broke this downtrend line. So where is your entry point? Entry point is here. You buy here, right? The moment it trades above this downtrend line, you put stop loss here. Okay, and you're going to ride it all the way up. Okay, you're going to ride it all the way up. One of the ways to take profits is to sell the stock if it drops below the 20 MA in the 60-minute chart. So maybe you can sell half here, and then it went down and went back up. And if you have a bit of knowledge of the chart patterns, right, bearish reversal chart patterns, which I've also done a lesson on it. I also put a link in the description below so that you can learn about this chart pattern as well. If you see this double top, 60-minute double top, right, what are you going to do if you're still holding half of it? Maybe you should sell some more as the double top forms, and when it drops below this 20 MA again for the second time, okay, you might as well sell everything. And look, indeed the stock gap down and also continue lower. So the more you learn about technical analysis and chart patterns, the more you'll be able to spot a lot of things, right? Here is my third example of Apple giving a trade at the 200-day MA support. Okay, and this is a very reason. Back in November, just 2 months ago. You see, it doesn't happen all the time. The Apple or whatever stock doesn't drop to the 200 MA all the time. Maybe it will happen once every 4 to 5 months or so. Okay, but there are so many stocks in the S&P 500. Definitely there's going to be 1 or 2 that will drop to this rising 200 MA in a month. Okay, so we have in around November the stock, well, really after it breaks an uptrend line, a gap down, a nasty white movement, and the stock just drops all the way. This must be a very terrible time for those who are holding or trading. You know, you'll get slapped left, right, and center. But eventually, the stock drops to around the rising 200 MA. And right, what happens here to here? Right, we are not interested. Okay, we don't even want to bother looking at the stock. For us, we just want to look at the stock if it drops to the rising 200 MA. So we save ourselves a lot of pain and sorrow, and stop wasting a lot of time, right, on what happens here. But when Apple drops to here, we start to be interested. It's only a few days we are interested in it. When it drops to here, look, it trades sideways, and then boom, it shoots up. Probably we're going to enter here. If you have learned about the rising 200 MA, this 200 MA trading strategy, you're probably going to enter here. Okay, there are so many technical concepts here. Okay, we have a break of a bigger trend line, which is why the stock moved up a lot. And we also have a smaller trend line here. You probably won't be able to see it, okay, if you're a beginner, but if you look at the 60-minute chart later, which I'm going to show you, you're going to see it. Now, at this moment of writing, the stock gap down and it kind of like form a double bottom. Okay, this might be another possible setup. I don't know. But what I don't like is gap downs, right? Whenever there's gap down before setup, right, it's usually not very good unless it trades above a downtrend line. That's what I like to see. But if you ask me whether to enter or not, I don't like it. I want it to trade above a downtrend line in the daily charts. Okay, but moving back here is a setup for you at the rising 200 MA. Right? Ideally, you can trade stocks that drop to their flat moving average, but it's advisable to trade stocks that drop to their rising 200-day moving average. Why? Because it shows long-term trend continuation. Okay, look, when it's rising, move up, rising, drop, it moves up, which tells us, the stock is going to rise. The stock is a long-term uptrend. You are just there to pick up the stock in short-term weakness but long-term strength. So whenever it's short-term weakness, you go there and scoop up the stock, because long-term is going to be very bullish. So you buy on short-term weakness in long-term strength. You get it? Okay. You become like mini Warren Buffett, like that. So the 200 MA is a good way for you to be a mini Warren Buffett. If you know what I mean, he will probably buy lots of shares in the stock. Okay, even if the stock goes below the 200 MA, he can make it go back up again. And at this moment, I would just like to tell you that actually Warren Buffett, his entire portfolio, I think is more than 50% of his portfolio is in Apple itself. So from a person who is a conservative investor going into tech stocks, like that shows how much faith he has in Apple. Because one of the things he says about Apple is the products that people use is very sticky. Have you seen kids holding the iPad and teenagers, even young adults holding the iPhone and iPad? It's very sticky. They don't leave the teenager or the kid for long. It's like another extension from themselves. So if someone goes out of the house, right, if they didn't bring their iPhone, right, they will turn back and just take the iPhone. So it's very sticky. According to Warren Buffett, right, that's why it's a good stock. Because why? It's very sticky, the product. People don't leave their iPhone here and there. Okay? It's always good, your iPhone. Okay, I digress a bit, but okay, so this is the setup, and you're gonna look at the entry point. Okay, but before that, we also want to look at indicators. First, we look at price itself and the 200 MA. Then we move into indicators like stochastics, MACD, Bollinger Bands. I just use these three. You can use whatever you want and learn to spot, okay, what are the times, what are the things that happen to my RSI when it hits the 200 MA if it's a successful trade. So you build on that. For me, I already know how the MACD looks like, how the stochastics look like, how the Bollinger Band looks like. So the stock drops to around the rising 200 MA. It's at the edge of the lower band here. So there is a possibility that it's going to rise. Plus 0.1. Plus 0.2 is MACD histogram is going down but shortening, showing me that bearish momentum is slowing down. And then there's a buy signal, railroad tracks. Buy signal here shows that there'll be a lot of people. MACD is a very popular indicator. There's going to be a lot of people that's going to jump in and ride the short-term trend up. And then, of course, the stochastics is oversold. Not only is it oversold below this area here, oversold, okay, it gives a buy signal here. Can you see the buy signal here? and there's a smooth railroad track up. So I have 3 plus points already. Okay, and then I look at we have a double bottom here, right? Kind of a double bottom, right? But this stock there's a low here, but there's a lower low here. But look at the MACD lines here. Low here, but a higher low here. So there is a bullish divergence between price and the indicator. So this tells me that there is actually hidden strength. I have 4 plus points beside the fact that it's at the rising 200 MA. So this makes a more potent and powerful trade. So you will buy somewhere around here. Later we will look at the 16-minute chart for your perfect entry, and you ride it all the way up until it drops below the 20 MA. Remember I told you 20 MA short-term bullish. When it drops below the daily 20 MA, you might want to sell half. You might want to sell even more. Okay, and there's another thing that gave you an early warning also, MACD sell signal. Sometimes MACD sell signal might not mean that you should short the stock. It means that you might want to take half of your positions off the table around here. It's a bit early. You could have sold it around here as it hits the old high around here, but nobody's going to catch the top, right? Nobody's going to catch the exact top. But if you have entered around here and sold it here, you would have already made 2 to 3 times the risk. Your reward will have been at least 2 times. Okay. Now, 60-minute chart of Apple is for entry purposes. We want to enter at we want to refine our entry points. Okay, daily chart is for us to spot the 200 MA, to look for convergence of technical concepts. But when it comes to good trading, we want to enter at the best price possible. So this is a 60-minute chart. When you look at it, there are so many things that it tells me. I don't know whether you can see it or not, but I've drawn everything here. So first of all, the very first thing you need to do is to draw a downtrend line. Here's the downtrend line. You connect the highs, as many highs as possible. You can never draw a downtrend line here, but I would like to start at the very top here as much as possible. Just draw as much as possible. Okay, connect as many highs as possible, and stop. Give a bullish signal of change of trend when it breaks above the downtrend line here. But what's interesting is as the stock bottoms, it actually form an ascending triangle. Ascending triangle is a bullish reversal chart pattern. Again, I said just now, I'm going to put a link of a video lesson I did about bullish reversal chart patterns in the video description below. So you go check it out later if you have time. This is a bullish reversal chart pattern, the ascending triangle. Lows, higher lows, but about the same highs here. When the stock breaks out of bullish reversal pattern, you can actually buy it. So there are 2 things good that's happening here. Break of downtrend line, bullish. Break above ascending triangle, entry, bullish. The third thing is stock has already gone back above the 60-minute 20 MA. Okay, and look how the stock shot up. Okay, you can just ride the trend higher. As long as the stock is above the 20 MA, just ride it higher. Okay, maybe take profit, some of it, if it drops way below the 20 MA. Okay, but the good thing about ascending triangle is this: once it breaks out, right, the top of this pattern becomes a new support. So as long as the stock doesn't drop below this top of the ascending triangle, like there's a gap down here, the next day around here, you might be panicking. But if you know that a little about ascending triangle, you say, okay, I'm not going to be bearish on this stock as long as it stays above this top of this ascending triangle. You're just going to hold on to this stock, okay, and you have confidence in riding higher. So the more you learn about chart patterns, okay, the more confident you are in holding a trade longer. Now we're going to move into another example, which is not Apple. Okay, this is a 4th example. It's a daily chart of ACN Accenture. Okay, all this 200 MA bullish reversal not only happens in big stocks like Apple. Okay, some other stocks that's not so big also, they tend to find support area at the 200 MA. So what does this tell us? rising, isn't it? If you see the stock dropping to or near the rising 200 MA, get your guns ready to fire. Don't fire straight away, but you got to look at technical convergence, okay? Confluence of technical concepts. So this stock here didn't stop exactly when it hit the 200 MA. Now it doesn't matter, because the stock can drop a little bit and move back up, and that's valid, okay, because it tells us that psychologically, people, when they see the 200 MA, they're not selling, okay. Unless the stock drops way below here, then you will say, okay, the stock is so far from 200 MA. But if it drops just slightly below and goes back up, that's okay, it's still valid, okay. The 200 MA is still in play, okay. So besides the 200 MA, I can see there's a smaller trend line here which it broke. There's a larger trend line here, okay, that tells of a longer term trend change. Okay, stock also went back above the 20 MA, but our entry will be somewhere around here, okay. And as you ride the stock higher, if it drops below the 20 MA, the daily 20 MA, you might as well take some profits off the table. Here might be a double top, we don't know, okay. Maybe you want to go and look at whether there's bearish divergence or not, but we're not going to go into that. Now, I'm not going to go straight into the 60-minute chart. Okay, for this stock, I'll be going into a higher time frame. Just now we have a daily time frame. Now we have a weekly chart of ACN. Now it's important to look at multiple time frames. You want to look at higher time frame, lower time frames, because if it's a daily chart, you want to go into a weekly chart, because it helps to give you a bigger picture. Right? You want to look at the big picture, look at the from bird's eye point of view. It's like a jigsaw puzzle, the moment you open it, right, they're scattered so many pieces, but you want to look at the whole picture itself to get a big picture of what happens. Then you can get an idea, okay, this looks like a flower. Okay, I'm going to adjust the jigsaw pieces, right, to make a flower instead of not knowing anything. So it's something like that. When you look at the multiple time frames, the bigger time frames, you'll be able to see the big picture and spot turning points. So this stock is actually in the daily uptrend. Why? Because there's a low here, higher low, and it's just chugging higher, and there is support area here. There's highs here, and we can actually draw a support area here. I'm not going to go into the details of what is support and resistance in this video. Okay, take some time to learn about it, but I'm just telling you that when you look at this weekly chart, there is a support area, and that gives me confidence. When the stock drops to this area, there's a likelihood that it will go back up if there's a support area, and in the daily chart there's a rising 200 MA. And I also overlaid, put the MACDs here and the stochastics here, and look at this. When the stock drops to here, and stochastics is oversold and give a buy signal, right? Buy signal. This stock shot up. See, when stochastics was oversold in the weekly chart, the stock moved up. Oversold, gave a buy signal, it moved up. So the odds of the stock moving up, the third time when it was oversold and gave a buy signal, is very high. So when I combine all these things, I know that you and I will know that, hey, this is a high probability trade, and let's get ready to enter, right? So this is the 60-minute chart. We first look at the daily chart, then we look at the weekly chart, and then now we zoom into the 60-minute chart. This is the power of multiple time frame analysis that you probably won't learn a lot anywhere, but thankfully you came here, you learned something. Now, from now on, try to look at stocks from a daily point of view, weekly point of view, 60-minute point of view. And if you're a day trader or short-term trader, look at 15-minute and 5 minutes. But this is the 60-minute chart of Accenture. First thing you do, draw a downtrend line. It doesn't need to be perfect. You connect as many highs as possible. Okay. Remember, perfection is not our goal. You just want to draw a downtrend line for a reference. Okay. Now, our buy point here will be, there's some consolidation here. Sometimes what I like to do is just to draw a box above a consolidation area. And if the stock breaks above the downtrend line and is above the 60-minute 20 MA, when it breaks above this consolidation box, it can actually be an entry point for you. So you buy the stock here when it trades above the box and put stop loss here. And look how far high it runs. You can look at, even if you buy here, you can look at the amount of reward you have compared to the risk you have, isn't it? What happens if the stock goes down and you got stopped out? If you have, out of 10 trades, right, you have 6 or 7 trades like that, right, it will more than pay for all your losses in if you get hit stop loss straight away. So always think in the long term of reward and to risk. And the 200-day moving average trading strategy will give you an edge in the market. Okay, it will give you a high reward to risk ratio trade. And again, you can use many ways to take profits. Maybe if there's a resistance here you want to sell, but a good idea is if the stock drops way below, here the stock dropped slightly below 20 MA but shot up, but here the stock dropped way below the 20 MA, you should start selling half of your positions, or maybe more, or maybe 1/3. I don't know, it's up to you. Okay, the more you learn about technical analysis, the more you'll know when to sell. Okay, but if you're playing the 200-day moving average support, you can usually get a reward of 2 to 1. You might want to start selling half of your position when you're making 2 times more than your reward. Raise your stop loss to break even, right? And have a free trade. Okay, this is something professional traders do, right? To book their profits and also have a free trade. Okay, I just give you a few seconds for you to study this chart on your own. Just a few seconds, okay, before I continue talking. ADMA Biologics. Alright, done. Have you read everything? Alright, so where is our possible place here? First question, how many times did the stock drop near or at the 200-day moving average? If you say 1 time, then maybe you should get your glasses checked, or you need glasses. Okay, there's one possible setup here. Okay, it didn't drop and hit the 200 MA, but very near. Actually, for me, you can actually take the trade already. Okay, my entry point is somewhere in the 60-minute chart. You have to look at it. Very near, possible setup. Here's another possible setup. Here's another possible setup. And here is another possible setup. If you have taken 4 trades, you have lost 1. Correct? So that's how powerful the 200 MA is. But you also need to use your own intelligence and ask yourself, am I going to take every single trade that comes when the stock hits the 200 MA? No, I'm going to double check to see whether there are many confluence of technical concepts. Like here, maybe the reason why it didn't work very well because there's a lack of confluence of technical concepts. Okay, too steep a decline in too short a period of time compared to gradual declines here, gradual declines here. Okay, I didn't put any indicators here, but there must be a reason why this didn't work. Okay, you go and find out for yourself. Go through many charts when the stock hits the 200 MA. Find out the reason. Why does this 200 MA setup work so well this time but not the next or the previous one? Then you begin to understand why. Okay, and if you have taken a trade here, okay, you probably have also lost money. Sorry. So out of 4 times, 2 times you make money, 2 times you lost money. But even so, if you lost money, your reward to risk will take care of it. See, if you entered here, you exit. You entered here, you exit. Okay, your reward in these 2 successful times would have covered the losses here. Okay, that's some trading psychology, trade management for you. So I want to draw your attention to this setup. Okay, stock was trading. Okay, at the 200-day moving average. Now this is a flat kind of setup. Remember the previous examples are all rising. Okay, yeah, the moving average was rising here, but until when it reached here, it was kind of flat, although now it's moving slightly up. Even here is kind of hint that that's a slight slant upwards. But what is interesting here is there is a double bottom, okay, again a bullish reversal chart pattern, and two bottoming tails. Now bottoming tails are Japanese bullish reversal candlesticks. I've not done a video on that yet, but when I do it, I think maybe I'll link description below. Okay, but you can just Google or YouTube search and learn something about the bottoming tails. Bottoming tails, what happened is they will sell off, but at the end of the day, the stock closed back higher here. So next day, sell off down, and the stock moved back up to close higher. Okay, close at actually this bar here higher. Okay, here the first bar sell off, but didn't close at the low, but moved back up. Okay, so when you have a bottoming tail, it's a powerful signal that hey, the stock doesn't want to go down. But when you have two bottoming tails, it tells you 2 days the best tried to claw the stock down, but it just doesn't want to go down. 2 sessions, the bull end up winning. So when 2 times bulls also win, what does it tell you? That the stock just refuses to go down and want to move up. So we have point number 1, stock is at 200 MA. Point number 2, we have a bottoming tail. Point number 3, we have 2 bottoming tails. And plus point number 4 is we have double bottom. Okay, so isn't that good? Isn't that good when you have 4 technical concepts converging? Yeah, you want to take the trade, right? Because it's a very high probability trade. And another very advanced technical concept which I just want to mention to you. You don't need to crack your brain trying to understand it, but know this: when the stock goes down and have a rapid rise, okay, you can actually use this height and project it from the lows here to get a target. Okay, so rapid rise, sideways trading, and then the rapid rise again. This is called a measured move. It's a more advanced concept. Okay, maybe you just Google and read about it. I'm gonna do a video on it someday, but maybe not now, maybe someday later, but just Google and try to understand. Okay, so if you were to take a trade here, because there's rapid rise here, there's sideways, okay, you take a trade here, you know your target is probably here. So how do you enter? If you have a bit of knowledge about Japanese candlestick, you will know that hey, we have these 2 Japanese bottoming tails, you can enter right without waiting for it to break a downtrend line in the daily chart or 16-minute chart. You just enter it at when the stock trades above the highs of these 2 bottoming tails, and you put stop loss below the low of the bottoming tails, and look at your reward here. Wow, I think it must be 4 to 5 times compared to the loss that you have. So these are the kind of trades that you want to look for. And aren't you glad that you found this video, right? If this has been an eye-opener for you, though, please smash the like button and click the subscribe button, and even click on the notification bell so that you have more life-changing videos like this, for you in the future. So sorry, there's a bit of advert on my part, but you know the quality that I'm giving you, the training that I'm giving you, right? So let's look at the 60-minute chart now. We look at the daily chart. Now we're going to look at the 60-minute chart. So what happened here? Well, we can draw a trend line here, connect the 2 highs here to get a downtrend line. Your entry could be here. It was a bit late, but you could still profit from it. But when you look at the lows, what is it here? Here is a 60-minute ascending triangle. Ascending triangle can be a continuation pattern, but what I'm going to teach you in my bullish reversal chart pattern video lesson is, if you have time to watch it, is the ascending triangle can also be a bullish reversal chart pattern, and you can enter the stock when it goes above the highs of the ascending triangle. Put a stop loss here or even here, okay, along the lower trend line here. So if you have entered here, put a stop loss here, look at the amount of reward that you have. Even if you have sold half of your position as it drops below the 20 MA, your reward to risk is actually quite good, isn't it? Let's continue with another example. AEHR, daily chart of AEHR test systems. Stock had a nasty sell off here, okay, and then what happened? It hit the rising 200 MA. So what are you going to do the next time you see a stock like that? Get ready to buy the stock. But before that, you want to check whether the stock has supporting points. You know, you want to have 3-4 plus points where you enter. And just a side note, AEHR made a double top here. This is the pattern, the double top. Okay, you take the middle here, the height, to get a target. When you project it downwards, it met the target here, which is why I show you this, because there's another setup here. But because there was a bearish pattern here and a bearish target here, you don't want to be taking the trade. And as I mentioned in the Apple example just now, why it's not a good setup? Because there's a bearish gap. Okay, usually bearish gap before a setup, usually not so good. And if that happens, I want to see the break of downtrend line, daily downtrend line, highs. You connect. There's a downtrend line. It did not break above the downtrend line. Okay, and it was below the 20 MA. So bearish. No confirmation of bullishness. That's why this was not a conducive setup. But this was a good one. Okay. Then you look at the 60-minute chart of the setup, the good setup, not the bad setup. Okay. What happened here? Okay, there is a double bottom. I didn't write it down, but you should know by now. Number 1, plus point. Yep. Number 2, what is the plus point? The stock went back above the 20 MA. Number 3, yep. Right, sorry. The stock breaks 60-minute downtrend line. You connect as many highs as possible. Your entry will be here. Your stop loss will be below the double bottom pattern, and you ride stock all the way up. Okay, so simple example, but more examples are better than less examples, because when you look at more examples, you see, hey, it's not just one dimension, there are many variations. Okay, then you begin to learn more, and the more examples you look up and the more you trade is you actually have an intuition next time. Just look at the chart and you know whether it works or not. Yeah, you can actually reach that stage. So LRCX, why are we going to enter here? Yeah, you are a little master now. You know why? Because the stock drops to a rising 200 MA. Okay, history repeats itself, isn't it? Bottoming tail appeared, but there's only one bottoming tail. Small doji-like patterns. What does it tell us? That bearish momentum slowing down, there's indecision, why bears are undecided whether it's going to go lower, and then the bottoming tail appeared to show that the bulls are getting in control, and it's in a rising 200 MA. So what do? You can buy the stock if it breaks above the high of the bottoming tail. Okay, if you bought here, the next day, look how high it went, boom, all the way. Your stop loss is here, you buy here. Your reward is like 4 to 5 times more than your losses, isn't it? Even if you sell here and then it goes back up and you sell again, you just sell into strength, not sell into weakness. You sell into strength. Okay, go into the 60-minute chart. Okay, what is the first thing you want to look at? Downtrend line. You draw a downtrend line, connect as many highs as possible. Yes, I know it's kind of, you cannot see the highs here, but like I say, there is no perfect way to draw a downtrend line. Okay, it's based on experience. Okay, and you just want to connect as many highs as possible. Some people might even doubt whether this is a downtrend line, but to me, I like to draw it that way. I see the stock trade above here. Some people also see it. That's why a big large green candle here. Okay, and the stock has traded above the 20 MA in the 60-minute chart. This is a 60-minute chart. Okay, don't get confused. There is a bottoming tail here as well, right? It tells us that even in a 60-minute chart, stock refuses to go lower but goes back higher. You put a stop loss here, you buy here. So look at your reward. Even if you sell here, your risk to reward is so big. Okay? So you can buy the stock when it breaks above the downtrend line or above the highs of the daily bottoming tail. You know, when it comes to trading, there are so many ways to enter. I'm just suggesting that you buy when it trades above a downtrend line so that your probability of success is higher. Okay. Now let's look at MAR, Marriott daily chart. Okay. What happens here? There are how many trading opportunities? Yes, 1, 2, and 3. 3 trading opportunities. Okay, but we're going to look at here. We're not going to go into here. You just try to figure out why it worked, why it didn't work. We're going to go into here. There is a bottoming tail, the rising 200 MA, right? So later the stock breaks above the downtrend line, move back above the 20 MA, and it shot all the way up. Now I'm going to look at the weekly chart of Marriott. You see, if you only look at daily chart, there are a lot of things that you might miss out. So this is the weekly chart of Marriott. This is where the 200 MA happened. And here is a long-term support. Okay, stock broke above this resistance. Support and resistance tells me that when resistance is overcome, it becomes a new support the next time the stock drops to there. We have long-term support here, and guess what? We have a beautiful bottoming tail in the weekly chart. You can just buy the stock when it trades above the high of the bottoming tail. Right? MACD histogram is slowly shortening. That tells me that bearish momentum slowing down. And weekly stochastic is oversold and have a buy signal. So when you have so many things that converge, okay, I missed one. There's a weekly 20 MA and 50 MA. We have these railroad tracks. Okay, when moving average, the faster moving average is above the slower moving average, and they are in the railroad track, it's actually very bullish if the stock drops into the middle of it. Okay, so just telling you that when you have technical concepts that are converging, you're going to have a very profitable and high probability trade. Okay, weekly chart can give extra confirmation to the daily signal. Yeah, it's true. Okay, sometimes you don't even need to look at a 60-minute chart for entry, like in this example. Okay, your knowledge of how to enter will grow as you learn to look at multiple time frame analysis. Okay, MU. Okay, we have this stock bouncing up and down, but we just don't care what happens here, right? You save yourself a lot of worries and trouble. You're only interested in the stock when it drops to the 200 MA. So we also have an uptrend line support. You know, downtrend line is when you connect as many highs as possible. Uptrend line is when you connect as many lows as possible. So this stock was at the 200 MA support and at the uptrend line support. So the rising 200 MA, I'm going to put it as a gem here. Rising 200 MA often points to long-term strength, which is why the stock skyrocketed higher. And the stock breaks above this downtrend line, it should tell you that something good is also going to happen in the future. Okay, so let's move into the 60-minute chart of MU, Micron Technology, to see where we can enter better. So first of all, is there a downtrend line? Yes, it broke above the downtrend line. Your entry could be here. Stock has traded back above the 20 MA. Bullishness. But if you know a bit about bullish reversal chart patterns, my friends, I keep telling you this, bullish reversal chart patterns are incredible entry points. This is a triangle pattern, right? It's a non-directional pattern, but if you see it happening at a daily 200 MA and it breaks above this triangle, it's a buy point. And many people saw it. Why? Because there's some really bullish big candle here. Okay, you can buy it here, put the stop loss here, and look all the way it goes up. Sell half your position when it drops below the 20 MA decisively, and maybe sell even more. But you already make quite a lot of money. Your reward to risk is quite good as well. So I hope this hour-long presentation has given you a lot of information. Okay, I know it's very tough for beginners. Okay, it's simple to spot, but very difficult to look at the other technical concepts like stochastics, MACD, and so on. Okay, but let's recap. Okay, you can always play this video again. Okay, so there's power of videos. You know, you can play it again and again until you understand and learn more. Then you come back to the video, and you'll be able to understand more. Okay, the more you learn, the more you understand. Okay, recap. Always find trading candidates at or near the daily 200 MA. That is how you spot the stock you want to trade. Any other time, you just don't bother about it. Okay, don't waste your time worrying so much. When it hits the rising 20 MA, you find it. You look at the stock, study whether you should trade it or put it on your watch list. A rising 200 MA is much more powerful because it's in a long-term uptrend. Yes, you can trade flat 200 MA. For an example, just now was stock making two double bottoming tails, right, at the flat 200 MA. Yes, you can trade that. But for more powerful moves, right, you want to choose a rising 200 MA. Then you switch to weekly chart. Okay, for bigger picture, look for oversold stochastics or MACD indicators or whatever indicators you like. Look for long-term support areas. Then go back and look at the daily chart indicators, stochastics, what they're telling you, MACD, what they're telling you. Are there any daily bullish candlestick patterns? Right? Are there any daily bullish candlestick patterns? Like, okay, there's a bullish Harmai or bullish bottoming tail or whatever. You know, just Google some of the bullish candlestick pattern. If you see it happening at the rising 200 MA, that's another plus point for you. Okay, if the stock chart has a chart pattern, maybe triple bottom, double bottom, I don't know, whatever bullish chart pattern happens at the 200 MA is even better, another plus point. Then, after you do your homework in the daily and weekly chart, zoom into the 60 chart for entry, look for more patterns and so on. Stock should break a downtrend line. Most of your entry point should be when it breaks a downtrend line. Or you can have a bullish reversal chart pattern. You enter according to the rules, like triangle, ascending triangle. When it breaks out, you enter. And also for short-term trend, you want to make sure it's short-term bullish. Don't enter the stock when it's short-term still bearish. Enter when it's short-term bullish. We must go back above the 60-minute 20 MA. Take profits, half or partial profits, or whatever, or 2/3 profits, or all profits, right? Depends on your skill level. When it falls back below the 60-minute 20 MA, or when you go to the daily chart back, right, zoom out, you see, okay, it drops below 20 MA. Take some profits, okay? If stock is at a significant resistance area, take some profits. And if there's a chart pattern target, take profits as well. So I hope that this lesson on the 200 MA trading strategy has opened your eyes to so many possibilities of making money in the stock market. And if you enjoy this lesson, you learn a lot, please smash the like button and click on the subscribe button. Share it with your friends and so click the notification bell. And I see you in the next one.